Alright, so I was going to make a video today on how to get around the PDT rule, except a guy contacted me and he wants to buy this transmission off me. Problem is, it's attached to an engine, so I have to tear it apart. So I figured, why not kill two birds with one stone and make money getting this transmission sold and make a video. So let's just get to it. PDT rule, what is it? It is a government regulated thing for stockbrokers where anybody under $25,000 in their trading account is subjected to the PDT rule, which is pattern day trader. What it is if you make more than 3 day trades in a 5-day period and you have less than the $25,000 in your account, you will be flagged as a pattern day trader. And if you're flagged, your account will be locked for 90 days. Now, what is a day trade? It is where you buy and sell a stock in the same day. So it's 2 o'clock right now, it's a Saturday, but it doesn't really matter. If I bought a stock right now and the stock market was actually open and I sold it at 4 p.m. or even after market hours, that would be considered a day trade and I get one strike. Now, I can do that. I can do one Monday, one Wednesday, and one Friday, and the next Monday it will roll around just to open up that first Monday that I traded. So I'll have one more pattern day trade to use. That limits some people starting out, especially, it helps actually, because if you're totally new and you're eager to get into the stock market, you're going to blow up your account, and the pattern day trader can be a good thing if you're very impulsive or, you know, wasting money. But there are a few ways to get around it. Earlier I said it's a US government thing, which means if there's a company outside of the US, they are exempt from the PDT rule. An example of this is SureTrader. A lot of people talk about this platform. They are based in the Bahamas and they have 6-to-1 margin. It costs $5 per trade and a penny per share, and you can trade as much as you want in a day because they are exempt from the PDT rule because they're outside of the US. Now, another thing to note is pattern day trader rule only applies to margin accounts. It does not apply to cash accounts. What's the difference? Well, a margin account is constituted by two things. Either your broker lends you money, like the SureTrader, which is 6-to-1, or Colmex Pro, which we'll talk about in a second, which is 20-to-1 margin. A cash account is just your money. And another benefit of a margin account is they do instant transfers for the day. So if you have $1,000 in your account and you trade $1,000, which I don't recommend, but if you were to, your money would be instantly usable again right then as soon as you sell your shares. That's one of the benefits of a margin account. Cash account, you can use your own money and you're exempt from the PDT rule. However, if you use all the $1,000, you have to usually wait 3 days for your funds to settle. If you use a cash account like in Robinhood, you're exempt from the PDT rule, but you have to wait 3 days for the funds to settle back through before you can use it again. So if you trade on Monday, you won't be able to use your money again until Thursday, which poses some problems. So my dad just showed up and he asked me if I wanted to ride in his 850 horse 10-second Nova. That's street legal. No, sounds boring as hell. That was absolutely terrible. Cop showed up. Let's continue talking about margin accounts though. There is another platform called Colmex Pro. A friend of mine recommended it to me. He's been day trading since January and he's been really successful so far. The Colmex software is the exact same as SureTrader, I believe, because all these companies source or lease what's called DOS systems or DOS platform. I don't really know how it works, but I'm guessing some company developed it and then is just leasing out the rights and the patents for it. So if you learn SureTrader, you can also learn Colmex Pro and also SpeedTrader, which is the most popular trading platform, which has the best margins and fees. After you get to $25,000, SpeedTrader is also using the DOS platform. So if you learn Colmex Pro or SureTrader, you can transfer over to SpeedTrader relatively easily. Now, Colmex Pro is 20-to-1 margin, and it's 2 pennies per share, but the first 400 shares are free. And they also have different platform or plans. So starting out at $1,500 for the deposit, which is the minimum for Colmex Pro, SureTrader is a $500 minimum, so if you're lower on cash, SureTrader is the way to go. Colmex Pro, the first 400 shares are free, and then it's 2 pennies per share after that. Now, what that means is if you're buying stocks that are, you know, $1 or more, and you're starting out and you've only got like $1,500, Colmex Pro is probably a pretty good option to go with because it's not going to eat your fees and ECN fees or you know, the penny per share, which is how SureTrader works. The problem runs into if you're wanting to trade really low cap stocks or penny stocks like 2 cents, 10 cents, 25 cents, stuff like that. You know, you're going to be getting into 1,000 shares, 10,000 shares, 25,000 shares, and those penny fees will add up very quickly. So what a lot of people do is they start with SureTrader or Colmex Pro or any other kind of platform, and they just try to build up their account trading, you know, low caps like $1 or higher. Let's get back to cash accounts though. There is a option for people that don't want to do margin accounts or don't have the $500 minimum for SureTrader or the $1,500 for Colmex, and that is UStockTrade. It's an app for your phone, and I do believe they have a desktop app also. It's $1 per month for their subscription, and then $1 per trade, which comes out to $2 if you're day trading. So you buy $1, sell another dollar. The benefits of UStockTrade versus other cheap platforms like Robinhood is, one, I've heard they have really good execution, and from my experience, Robinhood sucks with execution, and I'm dropping them. The other one is they have same-day turnaround for your settlements, for your money. So if you have a cash account and you're using UStockTrades, if you buy one day, let's say you have $1,000 in your account. If you spend all $1,000, you will not be able to use it like a margin account in the same day. However, UStockTrade is same day turnaround. So you'll be able to use all $1,000 again the next day instead of waiting 3 days like Robinhood. So yeah, that's a couple ways to get around the PDT rule. You can use a cash account in Robinhood if you're only trading like $1 or $100 and you're practicing. Robinhood's totally free. They have terrible execution. I would recommend swing trading instead of day trading with Robinhood. I had some pretty good success swing trading ETFs like JNUG and JDST. What I would do is just watch the daily chart, and when it would come down on its low side, I think around $15 or something, I would buy into it, and then I'd wait for it to swing back up to its high side at like $18. It'd take maybe 2 days, 3 days, and I make anywhere from 5 to 10%. It's a pretty simple strategy to start out with if you have no idea what you're doing in the stock market. Yeah, I would not use Robinhood for day trading. It's just the execution is terrible, and they have lag and all kinds of issues a lot of times. The step up from that is UStockTrade, which is $1 a month subscriptions, $1 per trade, and they have a lot better execution. Or you can start out with SureTrader, which the benefit of margin accounts like SureTrader and Colmex Pro is they also allow you to short sell, which again, if you're brand new and you don't know what you're doing, don't short sell, but eventually short selling is something that I'm interested in, so that's why I'm switching to SureTrader and then eventually Colmex Pro. But yeah, that's it. Now I just got to tear apart this engine and get it out of here. Hope that helped you guys.
Yeah, we're building from 73, 74, they changed it. And
Yeah, 68 to 72.